All right, I am here with Michael Saylor. He is the CEO of MicroStrategy and really a pioneer, I would say, in the sort of like current wave of Bitcoin, because really the first public company late last year, middle of last year, to make a point about putting some of its treasury cash into Bitcoin. The stock has soared since then. Other companies have since followed suit. Michael, thank you so much for joining us.
Thanks, Joe.
Michael, like I said, you were really a sort of pioneer in this middle of last year. I think it was last summer, saying you're going to invest in Bitcoin, some of your cash. You've done it multiple times since then. You've even gone out and sold convertible debt. How many companies have you talked to? How many public company CEOs have you talked to since then, the last 6 or 9 months or so, who are interested in sort of replicating what you've done?
Well, quite a few. I mean, I can't really share my discussions with public company officers, but it is popping up as a much greater trend in the last 6 months, and I think it's coming to the forefront of the conversation with all companies, private and public.
So you've been pretty clear on this idea that you're not in favor of holding extra cash, especially given your views on monetary policy, the dollar, and so forth. What is it, though, about Bitcoin specifically versus other alternatives, or, say, distributing extra cash back to shareholders? What is it about Bitcoin specifically that, in your view, makes it a logical asset for companies to at least put some of their money in?
Well, I mean, let's look at the big picture. I've been a public company officer for 22 years. When you could generate 5 to 6% short-term interest on treasuries, and you thought that the cost of capital was 7%, then you didn't have to consider anything other than a conventional treasury strategy. You're maybe taking a minus 2% yield per year. I think that when conventional treasury assets started yielding 2% and you had a cost of capital of 7%, which is the expansion of the money supply, it became a minus 5%. People, they grit their teeth and they got through it. That was for the past 4, 5, 6 years. Now in 2020, we've seen the cost of capital explode. It's 25% monetary supply expansion. The treasury strategies are now 0, 1, less than 1%. So you've got a negative real yield, minus 25%. That's the cost of capital. Okay, that's actually turning up the heat that's causing everyone to realize that conventional treasury strategies are broken. Now, what are you going to do? Look at the last 12 months, ROI. Bitcoin is up 461%. S&P is up 25%. If you invested all of your treasury assets in the SPDR, in the S&P index, you kept up with the cost of capital. NASDAQ's up 53%. Big tech, they're monopolies, they're extraordinary, they're staying ahead of the cost of capital. Treasuries, down 7.7%. If you were holding long bonds like TLT, that's a disaster. Gold, up 9%. It's also a disaster. It's not keeping up with the cost of capital. So why Bitcoin? Well, you can't hold conventional treasuries. You're looking at a negative real yield against the cost of capital of 15 to 25% a year. Right? I mean, I'm not a consumer. I have to control, I have to manage shareholder value. And if you want to maintain or grow shareholder value, you're going to have to grow your assets at a rate faster than the cost of capital. So your hurdle rate is 15%. Now, what are you going to do? And I think, yeah, if you look
at, it is a different definition of cost of capital that you have than, say, like a traditional accountant would have, right?
I don't think so. I think that a lot of people think about inflation. I think CPI. The cost of capital has always been, in a conventional environment, risk-free, 6, 7, 8%. If you talk to any institutional investor in the past decade and you said, my idea is I'm going to invest your money at 1% or 2% or 3% interest, they would have asked for it back. In fact, there's not a single institutional investor that can keep limited partner capital by promising 1 or 2 or 3% returns. So all investors know the cost of capital, it's about 7 or 8. Look, if you look at the compound annual growth rate of the S&P over a decade, it's 11.4% for the past decade. If you look at NASDAQ, it's faster, it's 17%. Big tech is better than the S&P. If you look at the compound annual growth rate of Bitcoin for the decade, it's 198%. Okay, so why Bitcoin? I have to move my money. Look, either got two choices: decapitalize the company or
Right.
invest the money into something which is going to keep up with the cost of capital or exceed the cost of capital. So let's talk about giving the money back. Well, Joe, the road to serfdom would be for you to surrender all your assets and take a job working exponentially harder for cash, growing exponentially weaker. No family on earth would do that. No investor is going to give all their capital back to the limited partners, right? No endowment's going to work. No university, no company can function by surrendering all their capital and then working harder exponentially for a currency growing weaker. And one more point. The robots are taking over the country. We're automating everything. So for Amazon to succeed, 15,000 retailers are destroyed. For Google to succeed, 15,000 media companies are destroyed. For Apple to succeed, 15,000 device manufacturers are destroyed. So
Right.
every company is competing against Google, Apple, Amazon, Facebook. These companies are dematerializing their products, and Microsoft can bundle a product, ship it to 80 million companies over the weekend. Now, how are you going to make money if you pretty much
Well,
give up all your capital and you start working to create a new product to compete against Microsoft, Facebook, Amazon, Apple, or Google when robots are taking over the world?
let's break into a couple of things. So one question, of course, that people have about Bitcoin is, even though it has done very well, the track record speaks for itself. It is also, we know it's extremely volatile. Historically, it's suffered big drawdowns. We don't know when the next one is going to be. In 2017, it peaked around 20,000, got as low as 5,000, I think, March of last year. Is there anything good about holding Bitcoin itself if it's not going up? In other words, during these drawdown cycles, is there anything about the asset that makes it an attractive thing for you to hold?
First of all, it's the hardest money on earth. It's an institutional grade safe haven asset. It's gold without all the imperfections of gold on a digital monetary network that moves at the speed of light that you can program to do 1 million transactions a second. So Bitcoin is digital gold on a big tech monetary network. Why would you want it? You would want it for the same reason that you want to run electric power to your city, or you would want to run running water to your building, because civilization is based on clean energy, clean water, clean communications, clean money, right? It is an extraordinarily important thing.